The U.S. housing market is facing yet another slump. Home sales in April plunged to the slowest pace for the month since 2009. The U.S. home builders pulled back on projects in the month of April. The reason? Trump's tariffs and growing fears of economic stress. Single-family home starts dropped 12% last month compared to just a year ago. All this information according to data from the U.S. Census Bureau and the Department of Housing and Urban Development. Single-family permits issued for new construction also falling more than 5% compared to March. These permits are a key indicator of future home construction. Raw material costs have already gone up due to tariffs, around 7% higher. And as Karina just told us, the drop in new construction comes at a time when home affordability is near generational lows. Okay, let's get some more insight into the state of housing here in the U.S. And for that, we're joined by Michelle Griffith, a global real estate advisor at Douglas Elliman Real Estate. Michelle, welcome to the program. Thanks for coming on. We appreciate it.
Absolutely. Thank you so much for having me.
So how tough are things out there right now? How are the recent tariffs impacting the cost of new construction? Well, what about the stuff that's already on the markets? Are people just, because we know consumer spending is also at a very low level right now.
No, absolutely, and you're spot on. And really what's happening in the U.S. housing market right now is really the perfect storm. And it's making affordable housing out of reach for so many Americans. This is not something that's just isolated to major U.S. cities, but we're really seeing this across the board. And of course, there's really three big factors that's driving this. Number one, home ownership. The price to buy a home right now is at an all-time high. We were looking at the data from 2019 to 2024, and home prices have increased by 50%. If you were buying a home in 2019, the average price was about $297,000, and now in 2025, it's about $407,000. So we're seeing that 50% increase.
Okay.
Number two, mortgage rates. This high interest rate environment is not great for buyers and it's not great for sellers. For every 1% increase that we see in mortgage rates, that takes about 10% of your buying power away. Again, making home ownership out of reach for so many Americans. And one of the third factors is limited supply. And we are truly seeing this across the board. We're tracking home builder confidence, and for the last 2 years, it's been a roller coaster. We were seeing in 2023, spring of 2023, that there was more optimism in home builder confidence, but then as soon as rates hit 8%, those confidence levels came down.
Okay, so
another indicator that we're tracking is the rental market, and what we're really seeing is that renter growth exceeded that of owner-occupied growth in 2024.
Let's talk about the effects that tariffs are having on housing affordability as well, because as you just detailed, affordability was already near crisis mode before the concerns about tariffs. So, as you said, the perfect storm.
Completely. And then adding the tariff conversation, once we got through the election in 2024, we were all hopeful on the real estate side that we were going to have a very robust spring market. Then the stock market volatility and all of the tariff conversations continued to put buyers across the board on the sidelines. Having all of those types of conversations, we all know the cost to renovate is significantly high. And now with these tariff conversations, it's really spooking a lot of buyers. And properties that are sitting on the market, without a doubt, are properties that need that continued renovation, gut renovations. So absolutely, the tariff conversations continued the pattern that we were seeing of buyers on the sidelines.
So that TLC that you talk about, fixing up the homes, making it attractive to buyers, as well as new home builders going out there, how are they dealing with the increased cost, the market uncertainties? And we have to talk about immigration too, because so many Latinos have worked in this field, and we're seeing a lot of people that are concerned about showing up on the job right now.
Absolutely. Immigration was a huge factor when people were looking at labor costs. And labor costs were already high, and now they're thinking with immigration, what's going to happen? So these are all part of the conversations that are continuing to have buyers on the sidelines. I will tell you this. we were looking at markets which were starting to say, okay, where were we seeing balanced affordability? And I will tell you that there were markets in the Midwest that were having balanced affordability housing. Akron, Ohio, St. Louis, Missouri. We were also seeing that in Pittsburgh. Now, the markets that weren't doing so well with affordable housing, Seattle, Washington, D.C. And again, when we're looking at the, let's say, 100 of the city's metropolitan towns, 40% of them were down on affordable housing. Again, some of the factors like New York City, where I live, and LA being some of the, worst inventory levels of affordable housing.
Yeah, I just read an article that there are 400,000 millionaires in New York City. So clearly, as you talked about, the affordable housing is a big wedge for so many people. But you touched on, I want to dig a little bit deeper into this. Of course, the regional differences in how the housing market is responding to these economic pressures. Let's talk more about some good areas and areas that are really struggling. Is DC one of the areas?
DC is one of the areas that are struggling. It's really hard for DC and Seattle. These are really the top two contenders in areas where they don't have enough affordable housing. In those specific areas, you have to make over $150,000 to be able to even tap into 50% of the inventory. We're also seeing areas like New York City and LA, zero affordable housing. But again, there are some shining stars here. And I think if you can tap into markets like the Midwest, they were saying St. Louis, Akron, Ohio, they're definitely significantly more balanced. There are also some U.S. cities that are making strides, like Raleigh, North Carolina, Des Moines, Iowa, and Grand Rapids, Michigan.
Michelle Griffith, good stuff. Thanks so much for your insight. We appreciate your time, and we look forward to chatting with you again.
Thanks so much for having me.